In Microsoft Dynamics AX, you can use project groups to group like projects together, which can help with reporting and specify the type of accounts that project transactions are posted to. For hours, expense items, and on-account transactions, you can also choose to post to either profit and loss or balance accounts. In certain cases, you can choose not to post hours transactions to ledger. Every project must belong to a project group. Therefore, you must set up at least one project group when you implement project management and accounting. Each project group is assigned to a project type, which means that when you create a project and define the project group, you can only select from the applicable project groups that apply to that type. After you set up a project group in the project groups form and select its project type, you can specify quite a few default settings. A few of these settings include transaction line property defaults, on-account invoice posting, and cost and revenue accounts. Some of the project group settings are only applicable to specific project types. Let's take a look. So the first thing that we'll take a look at are the general settings for the project group. And to navigate to a project group, you basically go to the project management and accounting module under setup, posting, project groups. And what you see here is basically the project group form. On the left side are all the different project groups, and then you see the body of the form. That's all the different setup that you can define. So there are five tabs, sorry. There's a general ledger, estimate, cost accounts, and revenue accounts, and we'll get into those specifically. But for the purpose of this slide, we'll talk about the general settings. So the general settings are pretty important. I guess when you create a new project group, the first thing you do is define the project group ID, which is this field right here. And it's a string, so you can put alphanumeric value in there. And then you define the name. Naming convention is pretty important because when you're selecting it, it's good to understand why you're selecting it. The next thing that you're going to define is basically the project type. So what project type is this project group applicable for? The next thing that you'll define is the search priority, and this should actually say ledger search priority. There's a form where you go set up which accounts should be used, and it either searches through that form with a project in mind or a category in mind as the first priority. So when you select a search priority, you're telling the system, should we look for a category specific value or a project specific value? And later on, we'll go into detail about search direction, but this is where you would define it. And then the next search priority revolves around line properties, which is one of the topics we'll talk about very shortly. But it's the same type of search priority. It will look through a table and either search based on category or project. And then you can also set the default line property for the specific project group, and that will default down to the project level. And then the final checkbox that you can check in here is to verify costs against remaining forecasts. So we haven't talked about forecasts yet, and we will downstream, but you can use forecasts in the fashion of really like a budget. So you can create a forecast, and we'll use a quantity, for example, of 100 hours. And there's such thing as a reducing forecast. So every time you post actuals, it will reduce your forecasted amount. So if you post 10 hours, it will reduce that 100 hours that you forecasted down to 90. Once you hit 0, if you have this thing toggled to yes, it will throw warnings all over the place telling you that you're going over your forecasted amount. All right, let's jump into some of the other settings on the project group. Okay, so the ledger and estimates tabs here, probably two of the most important tabs there are in the project management and accounting module. Just to talk towards the estimate tab first, estimate is really only applicable to fixed price in investment projects. So just keep that in mind when we start talking about those fields. To go back to the ledger tab, this is where you're, and I don't want to say telling the system whether you're posting to P&L or WIP accounts for specific transaction types, but you're suggesting as there's other setup that actually allows you to capitalize costs or not, or accrue revenue or not. So what you're doing here is suggesting. So for hours, right now we set the value to balance, and there's a few values in here, and we'll look at those specifically when we demonstrate this stuff. But right now I have it set to balance, which means that we're going to be using, suggesting to use WIP accounts, so capitalized cost. The other values in there are P&L and no ledger or never ledger. No ledger means that you won't post hours to the general ledger, but there's a routine that you can run if you decide to actually want those ledger postings. And never ledger just means that you'll never be able to post your hours to ledger. And the hours area right here is the only area that has no ledger or never ledger associated with it. Expenses and items, there's only two options: balance or P&L. On account invoicing as well, you can either post balance or P&L. And then for time and material type projects, you can use these accrue revenue toggles. And basically, you can, when you post transactions, you can actually accrue the revenue at time of posting. If you do accrue revenue for time and material projects, all your cost selections over here cannot be set to balance. It will force you to have those defined as profit and loss. All right, so that's pretty high level, but it's giving you some understanding of what you can and can't do on this ledger tab. We're going to be talking about this a lot more so when we get into the advanced courses, but just have a general understanding of what we're going through. In the basic courses, we're going to be talking about what we call a simple time material or fixed price, and when I say simple, it means we're just posting all costs to the P&L. All right. So when we get into the advanced modules as well, we'll start talking about this estimation functionality a little bit more. And you can see there's quite a few fields that you can define. So if you create a fixed price project group, the first thing that you need to know is these fields are required. You have to set these up, the revenue recognition fields. So what those mean are two things. The cost template is basically how often will you estimate or recognize revenue, or calculate a percent complete, basically. And so you have a calendar, or I'm talking towards the wrong one. That's the period code, is the calendar. So basically, you define your calendar, and you can set it up monthly, quarterly, however you want. Those are just the periods that the system will allow you to run an estimate. So then the one above that is the cost template, and cost template is a way of grouping your costs together, and a way of helping you define what categories go into your percent complete calculation. And there's a little bit more to that. We'll get into the cost template more, but that's just the general understanding. I guess what I'd like you to think of it right now is two things: grouping costs, or grouping your categories together, and how you can calculate percent complete. So these other toggles is where we get into or other drop downs is where we get into some more of the advanced functionality. The revenue recognition accounting rule is basically where you tell the system how you want to recognize revenue, whether it's a completed percentage or a completed contract, or there's a couple new methods that we'll talk about as well. Calculation method is another way of how you recognize revenue. It tacks on to what method you pick here. So I guess the only one that works with is completed percentage. So if you pick completed percentage, you can actually recognize your revenue in a little more granular fashion using the calculation methods that we'll discuss in a subsequent module. And then the matching principle as well, that's how, when you recognize revenue, do you want it to go to one account, or do you want to split into two accounts? So if you pick sales value, you're only going to split the recognized revenue into one account. If you pick the other option, which is production and profit, you will split the accounting, or the recognized revenue, into two accounts. One for production, which is the revenue will match your costs, and then any revenue over the cost will go into a profit account. So these, well, I guess these four right here are basically, if you pick sales value, then this sales value field becomes available, and you have to define a category associated with sales value. If you pick production and profit, then production and profit become available. And then we have this foreseeable losses toggle right here, which basically if your cost goes over your your contract value or projected revenue, then you can have some different accounting occur for that scenario, and then this accrued loss option here becomes available, and you have to associate a category with it. Other than that, you can define different accounts at a project group level. We'll talk about that downstream, but you can see right here for this WIP sales value one, we have a project group specific value there of 160,600. So I hope that gives you an understanding of the ledger and estimate tabs.